Good morning, this is Nick Inman from VolumeProfileTrader.com on Friday, March 2nd, and because I didn't do a video last night, I'm going to go ahead and give you one this morning, give you a brief summary of what I think about the market and considering it's Friday, putting that into consideration. But just looking at this market, completely objectively, what we've seen lately, which really, let me just extend this trend line, is the market has been bouncing off, generally speaking, the bottom of this trend line. And what we've seen more recently is these touches of the trend line have become more frequent. You can see we've had three nearly back to back to back, whereas the three before that, even the four, pretty spread out. Another thing we're seeing with this market is the highs are getting lower relative to the trend line. It's no longer touching the trend line. So this is what we have right now. We basically have a squeeze going on. And if this starts to push below this 1266 level, it may be, 1259, 1260, the point of control for last week. If we get any bounce there, I think that's your opportunity to sell into it. What I'm looking at today is an opportunity to possibly, definitely looking to get long the market because the trend's definitely higher, but at the same time, there have been, in the past few days, specifically talking about day trading, there have been decent trades to the downside. And that's showing you that the buyers of this market, or I should say the sellers, are getting more aggressive, and the buyers, maybe they're getting exhausted. And if that's the case, you can look down to levels that we haven't seen in a couple weeks or a month or so. I'm going to change these to months so you can get the point. You can see this 1340 level on the S&P. That could be a potential target. You see the really 1350 down to 1336, and what I'm looking at is this high volume here. That's probably a target starting, with the obvious. You start with the first level first, and the main one is 1355 to 1360 or so. And if we break below that, which I assume we would if we broke this trend line, 1340-ish would be your target. And if we really break that then you're going back to when the jobs report came out in February, and this was when the jobs report came out. The market gapped up and held that gap, and you can see every time it came down to those levels, we bounced. So that would be your obvious, looking for a bounce there again. If we don't, and we breach that, then I would have to assume we're going down to 1310. So, you're just projecting that if this market starts to fail, and it looks like it really is starting to, then you're going to have an opportunity to basically profit from any type of downsized move. You can look at the dollar, not feeder column. Alright, the dollar bouncing, here we go, February's point of control. You can see back in, generally speaking, the early part of February, we had a bounce off those levels. Nice trade to the upside. Then we traded, we had a little bounce off those levels, traded through it, came back, tested it, failed. And what have we had since? We had a rejection to the upside. So now all of these sellers down here are stuck, and we had a little mini base above the point of control, and we've gone higher since. Now we're up against January's point of control, and we have some decent volume from February, up around 79, 33, 34 on the dollar. And I think it warrants that this is showing you that on any weakness in the dollar, any strength on the market, you should look to take some profits, and that's just the reality of it. Now, the euro coming back down. It's going to test this point of control level. So the euro level, pulled up another chart. Okay, the euro, you can see how accurate, volume profile really is. If we take November's point of control and we take December's point of control, what has happened to the euro in those levels? We had a break into those levels, a test back, a bounce off, and then another basically failure, a double top, and then a rejection from those levels. So you think in any strength, people are going to be wanting to sell the euro. Now, with that said, you do have February's point of control, and way down here you have January's point of control. But from a buyer's standpoint, back in December you had some pretty decent volume at this 130 level or so, and you can see it's been the value area. It was the value area low in December, value area high in January, value area low in February. So this, between 130 and 131, it matters on the euro. And if we do go below those levels, watch out. It could get a little ugly, and that's just something to be aware of. So, anyways, I advise ringing the register on some of your positions. There's nothing wrong with it, especially if they have a great profit in it. Take half off because you'll probably have the opportunity to reload at lower prices. So, anyways, take care. Have a good trading morning. Have a good Friday. Stay tuned for the weekend update, either tonight or tomorrow.